Looking at expectations for the MPC's decision today, consensus seems to be that rates will be left on hold at 5.75%. Are you in line with consensus?
Yes, I agree with the consensus. I think the most shocking thing would be for them to cut rates. The most favorable situation would be for them to hike rates.
Looking at hiking rates, of course, bearing in mind that we've got this rising threat of inflation going higher to consider within a pretty robust growth scenario. What's your outlook in that regard? And to what extent is the bank actually walking a fine line here between inflation on the one hand and growth on the other, and managing those two?
Well, I think they need to probably go back to what their object is, which is price stability and defending the value of the Kenya shilling. Inflation is 140 basis points above their target level, so they need to consider that in terms of whether or not they're going to hike or cut or keep rates constant. Growth is good, but it's not really in line with what their object should be.
Of course, looking at that inflation figure, it comes on the back of the inflation basket having been revised, and that's seeing inflation back to within single digits at least. To what extent is this an accurate reflection of the inflationary scenario in Kenya in your books?
Well, I don't think it's extremely accurate. As you said, the basket was rejigged to take into consideration different items. The true scenario would probably give you a different picture. The rate of inflation would actually be much higher than it is. If you interviewed a common man on the street and asked him how much he spent this month relative to last month on basic items, I think it would be much higher than the 6% that the Stats Office is giving us.
Of course, that inflation figure is being hampered by the fact that we've got a weaker shilling to contend with at this stage. What are you making of that shilling level, where the central bank has reiterated time and time again that it will not intervene to strengthen the unit moving forward?
Well, I think the Kenya shilling weakness is one of the causes of the inflation we're talking about. Oil imports and any other imports of anything that the country does are affected by the Kenya shilling rate. So I think the central bank should not have a hardline stand and say that they won't intervene. They need to look at the factors that cause the shilling to weaken. I mean, the shilling is weak on the back of a very easily it's very easy to fund a short Kenya shilling position at the moment. So it's getting under speculative attack because everybody has one particular view and they want to enforce it, and I guess the central bank needs to change the tide.
To what extent are you reading the weakening of the shilling as a repricing of Kenyan risk after the central bank cut its rates to 5.75%? It's close to South Africa's 5%, which arguably has a better risk profile than Kenya does.
Yeah, it's a very significant reason why the Kenya shilling is as weak as it is. You're extremely right. The risk, as you said, the risk premium for Kenya and South Africa cannot be at par. What you're seeing is probably money moving out of the country, be it in stocks or government securities. That explains why the shilling is as weak as it is, irrespective of the other factors that we've mentioned of traditional demand-supply disequilibrium occasioned by energy prices going up and such.
Chris, the question then is to what extent a rate hike would see some shilling strength filter through, because one would assume that the hike would have to be considerably more than 0.25%, for example, because that would do very little in terms of impacting where the shilling is right now.
I think a hike, 25 basis points would be good, but it would not be great. What they need to do is actually, do some form of an open market operation. They need to stop, at least at the minimum, funding speculators, funding people who are shorting the Kenya shilling. Probably they could stop doing reverse repos, or maybe do something drastic like doing some repos and mopping up liquidity.
Of course, the major intention behind the central bank cutting rates in the first place was to get banks to lower their rates in tandem so that lending would be stimulated in order to stimulate economic growth. What's your position on that front and your outlook in that regard in terms of banks starting to cooperate in the country?
Well, I think banks will lend, but as you said, there's so much going on right now in the world, not just in Kenya. there's always a hotspot blowing up. If it's not Libya, it's Egypt, it's Bahrain, Saudi Arabia. What next? I mean, when you're facing this sort of an environment, it's not only the rate of interest that we'll consider. There are various things that you'll consider. And on the back of all of this, I don't think a rate cut in itself will be what the market needs.